Hello, I'm Suzanne Lasrato, Vice President of Member Services and Innovation at CIRO. I'm very excited to welcome you all to CIRO's new web series, where we bring you dynamic, one-on-one conversations with leaders, disruptors, and innovators who are reshaping the future of finance in Canada. From emerging trends to groundbreaking ideas, these bite-sized insights are designed to inspire and inform professionals navigating today's rapidly evolving financial landscape. In this episode of CIRO's web series, we turn our focus to one of the most talked about shifts in financial services, consumer-driven banking, and the path towards open banking in Canada. CIRO's Senior Vice President of Finance, Investor and Member Relations, Karen McGuinness, sits down with Michelle Beyo, CEO of Finavator, a passionate advocate for open banking and greater financial access and innovation. Together, they will explore where Canada stands on the journey towards open banking, what it means for consumers and the industry, and the opportunities and challenges that lie ahead.
So, Michelle Beyo, thank you so much for agreeing to participate in our leadership series. Really impressed by your resume, and I wanted to share that with our viewers today. You are president and a board member of the Open Finance Network Canada.
Yeah.
You're also the founder of Finavator, a consultancy firm in the financial and payments system, as well as winning an award for just last year for Woman of the Year in Open Banking Woman of the Year. Am I right?
I was honorably mentioned, which means I was number 2 in global from an international perspective this fall.
Well, amazing. And it does show the depth of your knowledge and experience. And so we thank you again for being an expert in open banking and coming to talk to us about open banking today. Now, Canada, of course, calls it consumer-driven banking. But maybe you wouldn't, if you don't mind, start off with what is open banking and what does open banking look like in Canada?
Yeah, definitely. Thank you for having me. I'm really honored to be here and part of the series. I think education is the most important part of understanding open banking because it is empowering consumers. So I like to go back. I was actually in telco for 6 years, if anybody remembers ClearNet, before it got bought by TELUS. So I understood what it was to give somebody a cell phone plan, them get used to their phone number, hand it out to everyone they know, and then if they no longer felt comfortable with their provider, they had to leave their phone number because they didn't own it. So that's my first example of what ownership of data means. So eventually there was legislation that forced all the telcos to create a back-end API to port phone numbers, to let the number live with a consumer. So if I leave, within 5 minutes, I can go to a new provider. Nothing changes. This is the concept of open banking. If I would like to move from one bank to even just use a fintech, but not have to give the fintech all of my information through a PDF or give them access to my account, I can do so by, if the open banking system exists and this fintech is a part accredited in the ecosystem as a trusted party, then that data can be ported, just the 5 pieces they need to give me the service I need. And that information can be deleted if I no longer want to work with that partner. So it's giving me control of my data, and it's giving a safe and secure API pipe to only trusted parties that are allowed in the system. So just like my phone number, I can port aspects of my data from one trusted party to another trusted party.
And do you think that's empowering consumers in the financial services industry, because now they can take that information, share it how they want with parties in terms of how they want it to be used, and perhaps streamlining or addressing inefficiencies in the system right now, because right now, obviously, your data stays with a financial institution. You can't necessarily move that when you may move financial institutions or want to work with another financial service provider.
Yeah, I think a lot of people microbank, meaning they're using a core bank, but they're using someone else for their mortgage, someone else for their insurance, someone else for their investments, and then someone else maybe for their kids' allowance. So as we're microbanking, we want to be able to move parts of our data so that we can have these services that are hyper-focused on serving me at the best cost. And to do that, we need to be able to port our data safely. So it's creating an ecosystem beyond banking. Open banking can move to open finance, which then encompasses their financial lives, but then it can move beyond that to what's called open data. So that would be open health, open social. If I no longer feel aligned to a social platform, I should be able to port my data out and delete it, and then allow me not to start over in that social experience. Just like if I was to leave a big bank and move to another big bank, I shouldn't have to start over like an 18-year-old finishing high school. I should be able to come over with the rapport and background that I have built so that they give me the products that I now need by being able to assess me because I'm giving them the correct information. Or if I'm setting up for a mortgage, it shouldn't take me weeks to get the right data, to port it, to take PDFs, to hand all these documents, which is unsafe to hand physical documents across multiple players to try and get the right mortgage information. Or screen scraping, which is described of giving your credentials over, looks super simple, but it's not telling you the fact that you're breaching your data rights by handing over your credentials, which is your password and your login information, so that they could scrape your data without you having to get a PDF and handing it to them. That should be the one way we're not allowed to share our data. There should be open banking to ensure that there is a safe API pipe that allows for that data to flow. This is the reason why in the UK in 2017, they created open banking to allow competition to flourish, but also to allow consumers to share their data without screen scraping. Because at that time, there was about 1 million people screen scraping in the UK when they got nervous. We have almost 9 million people potentially screen scraping in Canada. This is urgent. We need a safer way to port our data, and it's going to empower consumers. They're already using it today. You don't need to explain it to them. You just need to change the way they're doing it so they stop handing their credentials and they start having a back-end portal
in a much more safer way. Now, we've talked about consumers, so the benefit to consumers. You touched on understanding, bringing more history and information as you move your data around. And I think one of the cornerstones of our industry is know your client. And I'd like to turn it a little bit to say, what are the opportunities and risks to, say, a CIRO member in adopting an open finance framework?
Yeah, so I think when I look at open banking, I think open data is actually less data because you stop screen scraping, so you stop importing data you don't need to hold. And let's be honest, it's expensive to hold large sums of data that you don't need to utilize. So if it becomes less data, then they could protect it even in a more effective way. And I think from a KYC perspective, this could be helpful. In the banks, there's probably 7 records of you if you have 7 different products, because regulatory-wise, they need to KYC you in every business line. But if you could port your data, you could verify that you're a customer on this side and use that verification to allow you on the next side. So maybe they only have 1 record of data, but they're literally able to point to it through consent-driven open banking infrastructure, meaning less data, as you're the trusted party verifying that I am who I say I am and that you have all these data pieces. So this could actually be less expensive.
And what about opportunities for a richer knowledge of your client? If you're a CIRO member looking at, I need to advise my client, particularly one area that I think is a great opportunity to facilitate that open banking helps facilitate would be things like advising seniors in retirement, right? You know, I don't know if you've been through this process with an advisor, but typically when an advisor is asking, how much they go through a cash flow analysis, like how much do you pay in rent? How much do you pay at Starbucks, or going out for meals, tends to be underestimated by people. And now this is a rich data set that you can really now look at and start giving, I'd say, you get a better picture of your client and are able to better advise them, particularly in retirement, where understanding withdrawals are key and important, and how much people are spending just for living expenses. So I'm just wondering that there's a number of opportunities like that. What are the risks, though, of an open banking or an open finance framework, do you think?
Yeah, I think to speak to your first point, definitely more data gives you a better idea on holistically how to give them more options. They're already utilizing this in the UK. There's already examples of people in the UK who are parents are aging and they need their kids who are, in their mid 40s to 60s to help them manage their money. And there is now apps that can give permission to allow them to guide to ensure that they're not being scammed, and some alerts that can give some help down that path. I think it's always about having know your customer at the core. I'm not a compliance officer, but I truly believe that having the best and most important onboarding infrastructure to get as many signals to prove that your customer is who they say they are on the onboarding front is crucial. Because if that is incorrect, there has to be checks, obviously, throughout the rest of the system. But fraud is obviously a challenge. A little bit more in the US than in Canada. We do have less identity theft, I think, happening within our market. But I think just validating that you are who you say you are is so crucial. And I think without digital identity, makes it very difficult. Like in India, they have a very robust digital identity infrastructure. It makes it very hard to trick the system. Sweden as well has a bank ID infrastructure, very hard to trick the system. So I think without having digital identity, we need to have even more upfront triple checks to ensure we are dealing with the consumer, especially with deep fakes and AI and all of these new technologies coming down the path. We always have to realize that in any game, there's always fraud that could occur, and you have to always be very conscious of how do you mitigate this. So just having robust infrastructures, making sure consent frameworks in an open banking ecosystem are all similar. We were talking at the Open Finance Network, as I'm the president, and I've been a board member for over 5 years. Maybe it would be a good idea to have some type of certificate at the bottom of the website of anybody who happens to be a part of the open banking ecosystem that is accredited. Like we used to have the Better Business Bureau, or we have CDIC insurance, CDIC insured, open banking certified, something that lets the consumers know that, this is a certified business. And if someone's caught utilizing that logo without having that a credential, that's like jail and mass fines. And we have to make sure the system is very secure. But I think because Canada is going to have a framework that it's going to allow only accredited players in the system, it's basically banks who are already very regulated, as well as credit unions if they choose to join, fintechs and other players if they get accredited past this bar of security of how they hold their data to be allowed in the system. And they're the only ones who have access to the back end. So I think it's just the system is set up to be quite secure, actually more secure than the 9 million screen scraping today. So I'm excited for the security of the future of open finance.
So more of a closed system. And it's interesting that you talk about, accreditation and credentials. We have CIRO has a bunch of members, and they have to disclose that they're a member of CIRO and the protections that it gives investors and their client base, which leads me to a question for you. What do you think CIRO's role should be, or should CIRO have a role in an open banking or an open finance framework?
Yes, I don't work in government, and we are just an education and advocacy organization. We're not lobbyists, but I try and bring the best knowledge that I can from other markets. So I think a couple things. When local regulators and local bodies that are already regulated should have the ability to help down this path, right? So from an RPAA perspective, that's the retail payment oversight, new payment ecosystem. It's a very high bar. It's very expensive to get accredited. I'm of the belief that if you're accredited in something, there should be a way to be accredited in the next thing without having to start from scratch, like some type of advantage. Some type of advantage that you've already filled out these check boxes due to being this type of certification level, so that you're not double paying for the certification, if possible, because I think it's costly. I think the other challenge that I'm nervous about is in many markets, they have what's called tiered accreditation, meaning if you're smaller, you don't have to hit the same crazy bar of data levels because you're not holding the same data. In Canada, it looks like right now we're going to be the highest level of accreditation. I'm concerned on the cost ratio to see how many fintechs won't be able to afford to become accredited. And instead of the mission of becoming a more competitive landscape, how this might reduce the functionality and accessibility for Canadians that they're already enjoying. So I think we have to really look at the balance to make sure the core value of open banking is competition, reduced costs, and accessibility with additional data in a safe way to share this data. Like if I am a business owner today, and I'm very aware that I won't give my data in a credential share, for my accounting system, I have to upload PDFs, 15 different PDFs a month into my back-end accounting system so I don't have to let it credential share. There is some that have direct APIs connections, so I don't have to worry about those. But imagine we have 98% of all of our businesses are small to medium-sized businesses spending 10 hours a month in accounting. If we could help them have that reduced to an hour due to safe and secure data sharing infrastructure, that is a whole bunch of focus that could be spent on innovation and growth and GDP growth. The other really important use case that's being utilized in Brazil, for example, because they have this added data on small business owners, they were able to reduce the interest rates to those small business owners by about 2% because more data reduces risk and therefore has grown their ecosystem. And this could be a GDP growth opportunity when looked at in the right way and focused on small business.
Now, do you think the issue is maybe the name open banking? People automatically fear that this means less controls, less kind of everything is open for everybody at every point in time. And maybe that's the reason why Canada went to consumer driven to really change that focus so that it's not kind of a free for all. It's really a controlled framework, as you said. And you're working within that framework, which is, as you said, regulated. But it's interesting too that you also mention the level of regulation. So I think anyone in financial services knows that we have multiple regulators in financial services. I think the point that you make is really important, that we build upon a framework that exists to avoid duplication, increase efficiencies, and then have more regulatory collaboration and information sharing so that we're not all looking at the same thing multiple times over.
Yeah. I think our innovation is already stagnated. And then you layer on added regulation and added cost of regulation, and then we stagnate more. And I think when you look at other markets, they've been able to find ways to drive that innovation. And it's to simplify, not to reduce, but to simplify the regulatory landscape. So I hope that could be a focus when we're looking at GDP growth. How do we look at regulatory infrastructures and improve to simplify? But back to your point, looking at how this market could move on the sense of, what are we looking at from a data set perspective? And I think we just have to think bigger. It's really not about open banking or the terminology open banking. 68 other countries have already moved to open banking. We're behind. We're like 9 years behind. We've been talking about it for a very long time. And the only change we've really made is the name. I think we need to focus on the revenue and the GDP. I think when we think of number portability, this is data portability. Nobody knows how that number gets moved. Yet the telcos had to go do it. They didn't want to. They didn't want to lose that stickiness, but they were forced because there was a date and a mandate for them to facilitate. And as a consumer, I have no idea how my number magically ports from side to side, but I know the system works. And I hope in open banking, we don't need to spend any time on marketing open banking. Open banking is a framework, but the use case to the consumer is pay by bank, which is a way to pay with my bank account that is different from the current ways that we're paying, that can be more affordable in certain action sets. The other one is loan accessibility through data portability. It's about the use case, not about the terminology of the overarching ecosystem. And I think we have to stop asking consumers what open banking is, because I think that means we're open on Sundays longer. Open banking is a framework of empowering consumers' data but it's about the use case to the consumer. And I believe it should be more about business to business opportunity and consumer focused to drive costs down, to drive loans down, to drive better cash flow infrastructure, and then move it to consumers. Because business owners in Canada are savvy. They're willing to take the time to read, to know how they could get better offering and cheaper loans. They'll spend the time. Once that's penetrated, then you move to consumer and you give them pay by bank opportunities and other access points. But I think we have to stop talking about consumers understanding this.
And do you think it's time we stop talking about banking and move towards data as well? I think, as you mentioned, some countries came out with an open data framework and said, we'll start with banking, and then we're going to roll it out to other industries. So you saw, kind of where their vision was, that it's a much broader issue. Are you hoping that is the case for Canada, I'd imagine?
Yes, Canada's at an impasse, right? We need to find GDP growth. There's a McKinsey report that was put out in 2021, and it speaks to the fact that they looked across the entire world and saw that there's about a 1 to 5% GDP growth brought to by open data, not open banking, not open finance, but this concept of the economy of open data, meaning moving healthcare data without having to fax data records, efficiencies. So thinking of that path, I'm an entrepreneur. I've worked at a lot of organizations. I've advised a lot of fintechs. It's about having a KPI, having a vision, having a date, and having that mission be what everyone understands. Our mission and vision as Canada should be to get to open data. Like in Australia, that was their plan. They created in 2020 a mission to go to open data. In the midst of the pandemic, created a legislation called Consumer Data Right, meaning as a consumer, I officially own the rights to my data, and it will be implemented through a phased approach from open banking to open finance to open energy to open telco. They got stuck in one of their phases to perfect it and then move forward. And that could be challenging and frustrating, but at least they have a path and a plan to continue to move forward. And in Canada, we've just been talking about it for a very, very long time. Now that the US has decided from the CFPB to move for April 1st, 2026 to their open banking framework, it's going to push us to need to catch up and find like the synergies, because we work so closely with the US. Then moving to open banking is giving them more structure and more growth. We need to see it in the same perspective. This is not about the banks. The banks are an ecosystem player in the path to open data, but it's about the consumer.
And the banks are also looking at how they can increase their own, their own market share as it relates to new services from the open banking framework. So I don't think they're necessarily opposed to it. They're also, I think, some are seeing benefits to an open banking framework. But one thing I would like you to touch on, if you don't mind, is that Canada right now is read access only. Can you explain the difference, how some countries now also have write access and what that means to consumers?
Yeah, absolutely. So I believe that we should start with read access, because it's basically opening the system and allowing you to read the data you see, which allows you to, let's say, some of these use cases, fill out an application so I can still be with my core bank and let them work with the fintech and send over those 5 pieces of data. So that allows them to read and create that application, but without write. So you have to start with read so the system gets tested. People are able to understand consent is on record and working, revoking consent works. Consumers see the logo, whatever that hopefully, get comfort with the ecosystem. Yeah. But then you're eventually supposed to move, and not in 7 years, but like in 6 months or a year, to start having write access infrastructure. And write access allows for payments. So when you read, and if you Google, let's say, open banking pay by bank, that is one of the biggest use cases around the world facilitated by open banking, but it cannot exist without write access. So what you're seeing with pay by bank, one of the biggest use cases that I'm aware of, was in the UK. They had a fintech work with one party of government to collect taxes. And what they did is, you obviously can't collect taxes with a credit card. So people are sending bank orders, people are going online and trying to make payments, but they may be fat fingering the wrong business number or the wrong personal number, and therefore that payment gets lost. There's something like 1% of tax payments that are very difficult to match. Therefore, there's a lot of money spent trying to figure out where that payment is and accrue it to the right party, business or personal. What they did is do a pay by bank button on this tax infrastructure, allowing it to take that number, hold the actual payment account, and add in the direct payment from the consumer that had their data, matched it, and sent a clean payment to the government instantaneously. I don't have the exact stats, but after using one department, they moved to 15 different departments. The pickup and the accuracy was impressive. So this can actually be a win for the government and a win for consumers being frustrated paying their taxes. Nobody wants to do it, but when they do it, they never want to think about it again. They hope that button they press cleans the account.
They want it done right.
They want it done right. So there is use cases with Pay by Bank that could speed up payments. It could be a little bit more cost effective for business owners taking invoice payments that are higher. It's really expensive for them to pay with cards on higher monthly payments. So they could potentially, when accessible, use a Pay by Bank from customer to customer, which is going to allow them to have a higher threshold than they're having today.
So lower errors, more accuracy.
And I think as a business owner, when I go to settle at the end of the month, I'm receiving wires and payments that just have the amount and the date, but doesn't have the business name in it. So it's very hard to match. This would clean up kind of like an ISO 20022 data-rich payment. It would have more data so that my back-end accounting system could actually clear itself.
Wow. Now, let's talk about small businesses because, we've talked about, the banks looking at how it's going to impact their business. What about small businesses? Do you think that they will be a winner or a loser in an open banking framework?
It's a great question. We actually wrote a white paper, how we believe SMEs, small business owners, will be the biggest beneficiaries from an open banking ecosystem. They'll have better visibility to their own business. They potentially have cheaper access to loans and loans they might not have had access to before without this added data, as well as their accounting systems might be able to self-consult and, at the end of the month, finish all payments reconciliation infrastructure to a certain degree with some pay-by-bank payment. So I think it's going to simplify life for small businesses. At the same time, Canada's missing like 115,000 entrepreneurs. There's a stat that John Ruffalo has stated that we are down in our entrepreneurs within Canada, which is a concerning concept because GDP growth comes from entrepreneurs, it comes from small business owners, and they're not being inspired because it is difficult to run your own business. But if you could simplify the accounting, if you could simplify the access to loans, if you could simplify some of the day-to-day payment cost infrastructures, we could hopefully have a spur of new business owners, new entrepreneurs in the country.
To support and encourage growth in that area. That's all fantastic. I can talk to you forever, but I'm just wondering, do you have any final comments that you would like to make about open banking, open finance, or open data?
Yeah, I'm just I appreciate the opportunity to share the insights, and hopefully we can have a larger discussion. At OFNC, we hold events 4 times a year to try and bring the ecosystem together. There's webinars around the world on open data, open finance. We run a masterclass on the future of finance. There's just different ways that you can learn more about this ecosystem. And I think it can inspire others to find ways to get Canada to drive forth and make this a GDP growth opportunity versus a compliance exercise.
Excellent thoughts. Thank you so much, Michelle, for joining us today. Much appreciated.
Thank you for having me.
That was a fascinating discussion. Our sincere thanks to Michelle Beyo for sharing her insights, expertise, and vision as Canada moves closer to implementing open banking. The conversation highlighted both the promise and the practical considerations of building a more consumer-driven financial system. In our next episode, we'll shift focus to the often unappreciated but vital world of Canadian fixed income markets. Kevin McCoy, CIRO's Senior Vice President of Market Regulation, sits down with Carl Wildey, Managing Director and Vice Chair at CIBC World Markets. With deep experience in market structure, trading, and innovation, along with a key role in the transition to CORRA as Canada's new risk-free rate, Carl offers a unique and timely perspective on how the space is evolving. Stay tuned for future episodes where we'll bring you more thought-provoking discussions with the leaders and disruptors shaping the future of finance in Canada. Thanks for watching, and we'll see you next time.